As a small business accountant, I get asked this question a lot. What are the weirdest tax deductions you can claim? It's funny how during tax time, when I rock up to parties, I get asked what I do, and I say that I'm an accountant, hoping that it's boring so people just shrug it off. But then the conversation goes for hours on what tax deductions they can claim and how come their friend can claim this and that. So today, we're going to have a look at the 5 weirdest tax deductions you can claim. Firstly, there are 3 golden rules for what the ATO accepts as a valid business deduction. Number 1, the expense must have been for your business and not for private use. Number 2, if the expense is a mix of business and personal use, you can claim the portion that is used for your business. And number 3, you must have records to prove it. So here are the weirdest expenses that I've seen. Number 1, guard dog expenses. Yeah, you heard it right. Guard dog expenses. Suppose you have a shed full of tools or a home office filled with expensive equipment, and you're on the road making sales most of the day. You might want to have some security in place to avoid the theft. So you've considered a guard dog instead. Purchasing a guard dog to provide security over business equipment is considered a business asset. The capital cost of the guard dog will be initial purchase price of the dog and the training costs as well. Ongoing expenses for looking after your guard dog will also be tax deductible as well, including things like their food, shelter, and vet visits. But remember, the same rules apply when it comes to the business use portion of your guard dog. Because you store your business assets in and at your home, the guard dog will also provide protection to your personal things. So you have to separate the business protection use of the dog and the personal use of the dog for tax purposes as well. You also have to prove that your dog is genuinely a guard dog. The taxman will not be convinced that your family corgi is protecting your business assets regardless of how loud it yaps. Number 2, handbags. The ATO says that handbags used for work are tax deductible in certain situations. But you may have to keep a logbook to prove that your LV bag is not just carrying your makeup or Nintendo Switch. You can claim a deduction for assets like bags and briefcases that are used to carry work papers, laptops, or iPads. But the items must be used for work purposes. For example, if a briefcase or a handbag is mainly used to carry lunch and other personal items to work, you can't claim a deduction for the item. In cases with handbags where the main assumption is that it's used to carry personal items, it will be beneficial to keep a handbag logbook, to keep a record of the work use of their handbags for at least 3 months. This way, you have proof that if the ATO decides to audit you, you'll be okay. Alright, number 3. Sunscreen, sunglasses, and skin protection makeup. Many jobs require employees to spend most of their workday out in the sun. For carpenters, bricklayers, gardeners, truck drivers, and laborers, the sun is literally unavoidable. So the ATO allows those workers to claim a tax deduction for the cost of sunglasses, hats, and sunscreen lotions they use to protect themselves at work. These items are deductible as they protect the employee from harm or risk of skin cancer while they're doing their job. This does not mean that an office worker who collects the mail during work hours and is in the sun for 15 minutes per day will be allowed to claim a tax deduction for sunglasses and sunscreens. Also, the same rules apply for the business use and private use of the items. So if $300 for sunglasses are used for 50% of the private use purposes, then the deduction can only be claimed $150. Number 4, takeaway food during the meetings in the office. Did you know that pizzas can be tax deductible? You also can claim a tax deduction for your coffee. An employer can claim a tax deduction for the expenses when providing a light meal to employees. Work-related tax deductions with food and drink expenses are a great potential way to save on taxes, but not all types of food and drinks are possible. Make sure to check out our small business tax tip video claiming food and drink expenses. Number 5, gifts for clients. Giving your clients gifts, especially at Christmas time, is becoming increasingly popular, and it's easy to see why. Rewarding loyal clients is a great way to maintain long-standing business relationship and can help you win new ones as well. In 2016, the ATO announced that gifts given to clients in an effort to produce future income may be deductible on your tax return. But of course, there are limitations. For example, instead of giving a material gift, some companies prefer to entertain their clients. This is not tax deductible. A bottle of champagne, on the other hand, may be tax deductible. If I give my client a bottle of champagne for Christmas in hopes that it will generate more business with the client or encourage them to recommend my services to others, then I'm not giving it to them for personal reasons, so I can claim the champagne as a tax deduction. So as you can see, the ATO allows you to claim some weird deductions that you might not have known you could claim. But there is a limit to the weird claims. One of the assistant commissioners at the ATO said that they see a whole host of weird and wonderful claims that they unfortunately can't accept. In fact, 88% of other claims had to be adjusted. Some of these claims included dental costs, because a nice smile is essential to finding a job, gambling losses, the cost of a daughter's first birthday, and a phone bill for calling their parents. Who want to call their parents? The ATO had also seen claims where people have made statements such as the cost of raising a newborn is expensive. One tried to claim $20,000 for raising twins. Where people make genuine mistakes, the ATO would simply just reject the claim. But when people are deliberately making dishonest claims, the ATO will reject the claim and may impose a penalty. Penalties for making a false claim can be anywhere between 25% to 75% of the shortfall amount. So as funny as the stories are, you're going to want to get your claims right. So make sure you chat to a registered tax agent or your accountant before submitting a tax deduction. See you guys next time.